What's up, everybody? Welcome back. So this one's going to be a little bit longer than 5 minutes, but I'm going to show off exactly why we do these, why I look at it, why I go over it. So you actually see the, just a second, I'm trying to think these blue lines. Oh, so first and second standard deviations of the S&P that we drew last Sunday. But what I have here is a line chart. What you're used to looking at is one chart with candles on there. But we're looking at lines. We're looking at lines of multiple tickers. Because so CPI happened last week, right? And then the market went up, and then everyone thought their ticker was the best one for it. They just thought everything moves the same, everything's good. What last week was a huge gamma squeeze. There was a lot of delta hedging going on last week. Once we got outside that standard deviation, we popped up. There was, I guess, a little bit of a pullback, and then we just melted up to that second standard deviation, which is something we talk about when we get outside the first one. This is what you have to watch out for. I play the rein it back in play, but watch out for volatility because we go to that second spot. But I see a lot of people, I mean, I've seen YouTubers talk about, well, the EBITDA was good, the earnings was this or that. I've seen a whole lot of, there was news on this one. Meta had news of layoffs. Meta's in here. Like everyone likes to attribute why they think they went up. Like the obvious reason is right here in front of your face. Most people don't understand the mechanics behind things. And so I don't want people to mistake the coincidentally being right for actually being right. I think a lot of people do that. Like, oh, some people really think the world revolves around news. Is there certain economic data that can affect things? Yeah, sure can. You know what else is in this chart? The XLF, financials. Now, what was everyone's conversation? What's the news as to when interest rates go up, that's good for financials? Okay, cool. But we're going to start lowering the interest rates. We're going to pivot. We're going to pivot. We're going to pivot. The Feds are going to pivot. So that should have brought XLF down, right? Because we're no longer like, well, we're still in a rate increasing environment, but they brought it down. Now, that's economic data that does matter because it affected the dollar to the T. The dollar sold off just like it should, but the XLF didn't. Weird. There's a lot of people. I don't want to say there's a lot of people. There's a lot of excuses going on. There's a lot of people that are coincidentally right, and they love to attribute their reason as to why the stock market went up. But here it is. The S&P got up when we get outside that standard deviation. So market makers, they look at options, right? And especially in a bear market, liquidity dries up. So everything I have in here is a popular ticker. There is liquidity pools and just the most popular stuff. You see the other stuff really dry up. And the less popular stuff, this is I put less weighting as far as that. That's why I don't really talk about the expected moves on all the other tickers. It gets kind of irrelevant. I don't know how efficient they are. The stock market's incredibly efficient. I'll show you every ticker I have here in this one. But do you notice what every one of these are doing? Here's the morning dip. It pushed up. It came back down. It pushed up. The last dip at the end of the day pushed up, leveled off. But everyone in their individual ticker can tell you why it went up, why it went down. All the excuses are different. Like, guys, it's right in front of your face. Last week was a great example of that, of how things work, which is why I don't care about the news. I'll worry about it after. First of all, if you think you can play the news, you're silly. That's a silly thought. Get past the kindergarten crap, because honestly, you can't. By the time the news comes out, you're the last person to know. I say this all the time. If you do not have illegal insider information, you are a peasant. You know nothing. Don't pretend to know anything because you don't. You're lying to yourself. You're lying to everyone else that's following you if you think you're following the news and you got it figured out. Again, last person to know. Like, you guys want to make fun of Cramer so much. Remember how he ran a firm? You can literally listen to him say, like, if you want to get some excitement, you can just go put out an article, and then it happens. Most of you guys will just write that off and make fun of Cramer. But anyway, let's just look at all the tickers we have in here. I have Apple, Ford, so not even correlated sector-wise. Here's Meta, because layoffs. Here's QQQ, here's Amazon, here's Google, here's Microsoft, NVIDIA, XLF, and SPY is the last line. So all those are in here. All with the exact same movement. But did you pick out your ticker in here? Did you have a reason as to why it went up? Anyway, I'm going to clear all these out, actually. So we're gonna talk about the expected moves again, and this is exactly why I want to watch and go over them. Because look, we got outside. At this point, we were reining it back in, or we're going for that 2 spot. I say that every Sunday. If you're not subscribed, hit the subscribe button, turn the bell on, so you can literally watch me draw these every week and then know what's going on. Yeah, CPI kicked it off, but look at where we've been. CPI to the downside, I don't think would have been that bad. Because we got, let's go to the daily. Getting above, hang on, let's go to the, let's go to clear chart. Just to break this down. So much for a clear chart. So here's where we started melting. So just look at how many days we've spent just inside this area, right inside here. So the reason I word it this way, and we can grab it, I think CPI, it would have gotten, I don't want to change this because where we're at, but we'd have to put that bottom zone in there. So just keep this leveled out. When we exploded up with as much move as we had, so you got to figure out when this isn't the best. There's clearer examples out there, but let's draw some lines. Let's say we got, when it comes to hedging, let's just clone. How many weeks is that? That's April of 22. Every one of these we're going to do differently. Let's do a new color. So when you hear they are explode, they're building up energy. You guys have all heard that, like, oh, we're basing out, we're building up energy for a breakout. This is what's going on. Hang on, we're gonna change this to yellow. So this is a monthly. Let's just imagine this is a monthly zone, weekly zone, daily. This is your hourly. What's a new one? Let's get in a little scalping, a little baby zone. Got it. We already got green, teal. You got a little baby blue action. Let's start using these little baby blues for some zones. All right, so imagine the time frame. Let's say this is the expiration. When people buy options contracts, right? So you watch open interest stack up, and when we stay sideways for a long time, you start stacking up a bunch of the same options. So this is how you get these explosive moves to the upside. So here's everybody buying options this day, buying or selling, whatever the story is. They're looking on the monthly chart. They're quite a bit out. These people buying leaps, plenty of time. Then you got weeklies, not quite leaps, but the longer swing traders. These are like maybe liquid, or not liquid. What's the fake positions? Synthetic long and short positions. So deltas are not only just your chances of expiring in there out of the money, but how many shares you control. So I can buy a deep in the money options contract that's 100 deltas. I get the same movement as 100 shares. I'm controlling 100 shares, but I spend quite a bit less. So they're weeks. They're swing traders. Expiration out here. Maybe they haven't taken advantage of the move yet. People playing zones right here. Maybe they bought some spreads. People for just some swing trades. Then we got intraday traders. Now, market makers are pricing in all of this, and they got to hedge every one of these bets. But when we start stacking up when you start seeing the same numbers and the open interest really loading up on these levels, market makers have these levels priced in. We know it because we started pricing in this right here. And then we exploded up. So then you get that vacuum up to the upside. Because when you buy a position right here, if you were to buy a call, you buy an at-the-money call. It's 50 deltas. It's by design. It's where it's going to be at. You're 50. The market maker that provided it to you, right? They are now negative 50 deltas. Now, what do they do to hedge your bet? They go buy 50 shares. Now, as you leave the money, it's not a 1-to-1 ratio. Leave the at the money spot. So right now, all right, we got everybody accounted for. Everybody's good. But like I said, it's not a 1-to-1 ratio. Also, those options contracts move. If you're at the money was right here, your 50 deltas are now 80 to 90. They've only bought 50 shares. Now they got to buy 30 more just to compete with that, just to hedge and stay at a neutral delta. See, most people that argue with me, they're not even profitable, right? I don't need to look at their accounts. I just know they're not profitable. Some of these people I know are just not profitable. And they love to argue with me about this stuff because they don't think that's how it works. That's fine. They haven't been doing it as long. They're just not... Well, they're just not there. They don't understand the mechanics, so I hope you guys are paying attention because it doesn't matter about your opinion. Now when they got to start hedging, there's market movers, right? Now you guys, those are the people that are out to get you. Those are the stop hunt people. Those are people that are really trying to get you. And then there's market makers, okay? They're the level playing field. There's you on the field. There's the market movers on the field. You know, the trading firms, everyone else that can literally move markets with their positions. They're not out here clicking market, buy and sell like you guys are. They're actually using algos just to enter the trade because their money's so big. Okay, and then you got the field. The field is the market makers. Like, hey, I'll provide this market for you. I will sell it to you. I'll play matchmaker later, and I'll get another buyer for it. But I will hedge that bet. My job is to be the referee and stay neutral. I get it. You think AMC's going to 100,000 or 1,000, whatever it is. It's a lot. Was it 100,000? $1,000 a share? I don't know, you guys had something crazy. Anyway, the market maker says, sure, whatever. I'll sell you those calls. That's fine, and I will hedge and I'll buy some shares. I don't care. All of that on that playground is this right here. That's that. Now, when we get outside, they got to make a decision. Like, okay, now Mr. 50 Delta's over here. He's not at. He's at 80. We only bought 50 shares to account for him. I need to buy 30 more. What did I just tell you? Buy-side activity. So they tack on a few more shares. More buyers and sellers. Green candle. It goes up. Okay. Now, little Johnny YOLO over here. He's like, oh, shit, green candle. That thing's going to the moon. What trader out there sees a green move and thinks that's overbought? They're like, oh, it's going to go even higher. Look at all these meme things. They just keep going. So he buys some YOLO stuff. He's this guy. Let's get back to that chart. Okay, he's this guy. He's like, I'm tacking on. So he buys a call out of the money. There's a whole report now that retail is loading up on intraday 0 days to expiration. There's a lot of volume going in there. So now the market makers have to account for this. Like, all right, this guy. Now they'll move their deltas. It starts to move slow, but they ramp up fast. But so right now, when Mr. Johnny YOLO enters a trade, it's so far out of the money, the market makers don't even care. They're like, whatever, you're fine. The chances of us having to do that, slim to none. We can worry about that later. But when you get this vacuum up, now Mr. YOLO over here all of a sudden has a position to contend with, and now they have to hedge that bet. Like, okay, he's getting at the money. Now we got to start buying shares. Vacuums even further. He thinks he's super right. He's up 1,000% on his out of the money YOLO play. So now maybe he's buying more. You get this vacuum up. It looks like a momentum play, and really it is the market makers just rocking that thing with you. We get into this vacuum, this almost spiral. We've seen death spirals to the downside, and that's what gets these moves up. Now, when this happens, all the YouTubers, all the gurus love to tell you why, and it's usually never this reason. They usually come out and tell you, like, did you see the news? Oh, CPI was below. Like, how many CPIs have we had? We've had a lot, right? How many times have we had this reaction? We haven't. Like, CPI can kick things off. I can tell you the last one because I traded it. I was short CPI. That was this right here. And it was cool. It was a pretty good reaction, and it did continue. But at the same time, we didn't get this explosive move. We went for it. And that extra move, when that volatility, this is what you guys have to pay attention, because once we get outside these ranges, we're reining it back in, or we are going to vacuum up. And it's in that spot. If we go to just here on the Friday, that looked like crap. Oh, it was Thursday. Thursday we sent it. Friday we melted up. Here's where we sent it. We held out, but now market makers are buying, so that's where we get the melt up. That was that base out there. When we get to these levels, easy on the this is why, because I'm showing you why that's happening. And trying to go against it, you're not out there. Now you're competing with an actual market maker. Like, good luck. That's not going to happen. So that's why I draw these out. That's why I do pay attention to them. I actually don't care when we're in between. Fine and dandy. That's the playground. All the kids are on it. Everything's hunky-dory. I don't care. It's when we get outside. Now, here, again, 2 people on the board. You, the market movers. Out here, you, the market movers, and the market maker. That's a recipe for some extra volatility, and I don't care about VIX. Okay? Extra volatility because now there's an extra player on the board. So anyway, let's chart out next week's expected move to see how crazy we're actually gonna get. Did that get weird? All right, let's rock and roll. Anyway, I wanted to come out here and say that. I know this is gonna be a little bit extra, but to understand why I worry about this, not worry, but watch. That's exactly why. Because right now, that's last week. Now we have things accounted for. We're gonna get this reset switch. Let's see what the next week is pricing in. Right now, I wouldn't fight this. Hopefully, we do pull back or chop out next week. Hopefully, next week's boring. I would not want to fight this. This is probably a bull market rally. It would be cool if everyone just thought this was up because CPI news and everyone just blindly comes in. I know a lot of people think this is money on the sidelines that came in. It's probably not. And also, one more thing real quick, because I won't entertain stupid arguments. I really won't. If you think you have a valid argument, I'll debate it with you. But if you're just stupid, I probably won't. So that's why I don't respond to some of you guys. Sheer stupidity. I will not respond to. Well, never mind. I guess sucks to suck. You should just be here when I'm live so I can lose my train of thought in front of you guys. God, I really thought we were. I'll probably remember. Let's just bring it up. Let's get a TOS up here. Let's Tesla. 1446. Let's burn, turn and burn. IWM. 557. QQQ. 936. SPY. 996. Let's do that while I remember them all. Man, what was I about to get into? Well, hopefully you guys learned from what I already said. I know it's something about the price moving up because you think something. Hopefully it's a midterm rally. Hopefully we can just kick that thing off and keep it going. When do we expire? The 18th? It's the 14th? It's back to blue. Hang on. 18th. All right. At least we're pricing in higher low, higher high. I do think it's a buy the dip. I just would not fight the bulls on this for now. Midterm rally. That's probably why it went up, because the vote was also there. Who knows? Fun fact, we'll never actually know the why. I know this because this is just mechanics of how the market works. Like, I know the mechanics of how the buy and sell button actually works. But again, if you don't have that insider information, if you don't actually know stuff that's illegal, you're just not ahead of anyone. So maybe we don't kid ourselves. Or you're following, if you got a YouTube channel, which I do want to say I found out some of the YouTubers do follow me. Mr. Charlie commented he actually follows my main channel. I was super pumped to hear that. I got to figure out how he does his thing. Buy it, conviction, sell it. He's got 2 words. Just be really smooth with it. Did I do that right? Okay. I told Charlie we can do a collaboration. Really, I just like talking to other creators. But is anybody in his group? Charlie from Zip Trader, that's what it is. He's got 2 words. He buys at something, sells at something else. Does he still do that? That's bugging me. I want to know what those other words are. All right, 557. And then we got Tesla. While I wouldn't fight the bulls, what I'm saying is I think there is going to be some intraday trades. There might be some short opportunities. Like, you know, we're still in a normal market. Things still should pull back. Hopefully pull back. I do all of them while I'm just ADDing it up. I am waiting for the dip buy. So when the red candles come, I am going to buy. The last one was Tesla, right? It was at 14.46. Man, melt mode for this thing. That got brought right back in. So, a good example of the rein it back in play. So we got out. And now, this is a number I make up in my head. You guys have heard it here before if you've been subscribed for a while. 80%. 80% of the time I've noticed they rein it back in. 20% we head to the other side. So when we do get out here, so I actually did take this play. I took an L on SPY. Because we got outside, I took the rein it back in play. I actually sold some 397 calls. Call spreads, 397, 399. Collected $20 per contract. Lost 180. Or 150, I don't know. What did we close at? Yeah, so 150. 130 bucks looks like what I lost. Because I sold the 397s, bought the 399s. Anything above that was going to be a max loss. So every penny above 397 is $1 that I have to pay or lose, less what I collected. So right now that'd be $151 less the $20. So I lost looks like 130 bucks per one. Playing this play right here. So we got outside, works to the downside or ups, all the same. Reined it back in, closed right at the expected move. Puts us right at that zone. So basically, Tesla's going to a zone this week. We've got these zones priced in. Alright, this one's been long enough. I will wrap it up here. I don't think I'm looking to play Tesla this week. Yeah, I might give Tesla one shot this week. I'm just not a fan of this trend down. We know Elon sold. Is he done selling? I know he's hinted that he is. As it sits right now, I'm just not excited. I'm actually more excited about Meta right here. I know we played some zone-to-zone action. Well, gapped into that and then took off. I don't know. I'm a settler. I don't want to miss this. I don't trade Meta that often. This is just in my investment account. But I would buy the dip on that right now. Some of these are cheap. If they're going to have the conversation of money coming in off the sidelines, I think it's a stupid argument right now. Because money will probably come in off the sidelines at the bottom. Which I don't think we're there. I think this is just a bear market rally. I will say this, though, which we're going to talk about on Don Fran's show. After this rally, I think we have one more solid leg down. Hopefully lower lows. But that is where I will personally be looking at the bottom. Now, next year we'll be talking about recession. I think people will be in a recession. It's where you'll feel it in your wallets. And that's what's going to confuse everyone. We saw it during like the Rona. Like, you know, people will be laying off. Things are going to suck. And people are going to be so confused as to why the stock market's going up. But we'll cross that bridge when we get there. I'm going to wrap it up here. Ladies and gentlemen, hit that subscribe button, all the cool stuff. If you do want to check out that mentorship group, that is the Patreon link. Should be a second link down below. That is the nightly streams. And then my private chat. We can talk to me and tag me all day long if you want. But I'll wrap it up here. I will see you guys hopefully on Don Fran's show and in the future videos.